Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's take a look at the EURUSD chart. We'll start with this week's price action, beginning from the weekly chart. This week we saw a strong bullish candle that reversed the series of bearish candles from previous weeks. However, compared to the previous leg up, the recent pullback was relatively shallow, so it's important to stay cautious if you're looking to buy. There's still a chance we could see a pullback or some consolidation here. A key point moving forward is whether price can break above the recent high and continue the weekly uptrend. Now to the 1-hour chart. The yellow vertical line marks the start of this week's trading. The market opened with a gap up and continued to climb sharply, forming the short covering pattern we discussed in last week's video. Although price briefly stalled at the 4-hour resistance level, it never formed a downtrend on the lower time frames, and the uptrend resumed. Once price broke above the 4-hour swing high, the 4-hour chart officially shifted into an uptrend. Since then, we've continued to see a steady pattern of higher highs and higher lows, a solid uptrend. While the overall trend remains bullish, the fact that we're near recent highs means we should still be cautious with new entries going into next week. Let's now zoom out and revisit the broader picture, starting with the weekly chart. Here's how the structure looks at the moment. With price breaking above this resistance level, we can now say, from a Dow theory perspective, that the weekly chart is in an uptrend. That said, the recent strong rally has brought price into a higher zone, so we need to be cautious with new long entries. Looking ahead, two key resistance levels stand out. Both were important turning points on the weekly time frame in the past. Moving to the daily chart. The daily structure hasn't changed much. As long as price stays above the swing low, we can consider the uptrend intact on the daily chart. The recent pullback hasn't even reached the 38.2% retracement of the last leg up, so ideally we would have liked a deeper correction to support a safer long entry. With both the weekly and daily charts showing an uptrend, we would normally want to look for buying opportunities. But given that price remains at elevated levels, it's probably best to stay on the sidelines for now. If we do get another pullback, that could provide a better setup. Still, the recent bullish candles are solid and show strong buying pressure. Next, the 4-hour chart. This recent move broke above the descending trend line and confirmed a shift into an uptrend on the 4-hour time frame. From a bearish perspective, it would have been ideal for price to stay below the neckline of this head and shoulders pattern, but it broke through. That tells us there's clear bullish momentum. We've also seen a higher low form near the neckline area, which now appears to be acting as support. The current swing low is here. You can also draw a rising channel, which helps visualize ongoing buying pressure. Now on to the 1-hour chart. Price continues to form higher highs and higher lows, confirming the uptrend. The key swing low matches the one on the 4-hour chart. To summarize across time frames, the weekly, daily, 4-hour, and 1-hour charts are all in an uptrend. With all time frames aligned to the upside, it's hard to justify any short entries until the 1-hour chart shows a clear downtrend reversal. Now let's go over the possible trading scenarios. Starting with the bearish case. Since the long-term uptrend may have resumed, it's difficult to sell from here without clear evidence of a reversal. At the very least, we need to see the 1-hour chart shift into a downtrend. Ideally, price would first make a new high, creating some distance from the moving averages, and then reverse from a major resistance level. The most favorable setup would be a move above the recent high, a reaction at a weekly resistance level, and then a downtrend shift on the 1-hour chart. That's when we'd consider selling. Now for the bullish scenario. All time frames are pointing up, but we're still in a high zone, so we should be prepared for potential consolidation or a deeper pullback. If price pulls back toward the 4-hour swing low and lower time frames show a bullish reversal, that could present a solid buying opportunity. Using that 4-hour swing low as a risk level allows for tighter stop-loss placement and better risk-reward. At the current level, though, neither long nor short entries are very attractive. This is a time to stay patient and focus on minimizing risk. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.